Hello, hope you all are doing great. Let's look at the crude oils, CL futures. So for a long time, CL has been consolidating. Once it got over above this structure, this red line, it has been above it and it made a new high in March 2022. And since then, sideways. So for over 2 years, it has been on sideways. The important number for the bull trend is 78, and it tries to go in that zone and gets thrown back off, and then lower number to look at is 69.35. So far it is holding that. It comes there and it is still holding it. But the thing is, for the first time, it has broken this orange trend line. Last month it closed below it. This month it went ahead and tested it, and now it's back below, but holding here. So it's in a very, very tight space. So two possibilities. One is it could come down here a little bit more, again back to 63, 60, 59, and then, fake it out and go back up, breaking 78 this time and trying to go higher. If that's not the case, then this whole zone is exposed from red to green. This is 69.35, give it or take, few cents as time is moving, and the lower structure is 50. All this demand is now in there. So, 50, 53, 54, and somewhere here 60. So all this structure is there, but it's a big exposure around here if it doesn't go back up here. Your Oxy, the buffet stock, is also, for months it has been sideways, and now it is breaking down, staying below this. It came down, went back up, tested it, and now it's down. And it's exposing this whole zone till the red, because, here sideways, a lot of noise. But these three green candles is very clean. So if it wants to test lower, then this is a good possibility. Somewhere here, this candle, it's a good possibility to come down. And if it is a fake out, just like oil, then it'll try to go back and close above this, and probably the possibility is again back over, in 60s to 70s, early 70s, the breakout point. Now let's look at what RTY is saying. Your Russel, this was your all-time high zone, lot of spikes here, and RTY took a whole lot of time to overcome these spikes around 2100. Now it's between this green and red. Still again, thinking, lot of thinking. It does. It's a philosopher, basically. So now it's 2300 to 2325 is your zone to break it out of here. And if that happens convincingly, then we are looking around 26. The reason I'm saying 26 is because this already did 2460. So 2500 is almost there. So any spikes between 2500 to 2600 is what you're looking. To 2800 is your first zone, and your second zone would be 30 meaning 3000 to 3300 is your next zone. But first it needs to get out here. The reason I'm talking about RTY here along with CL is, if this breaks out and if CL is breaking down, then the correlation is good for the small cap stocks. The lower oil is good for the small businesses, basically. So from that angle, look at both these in conjunction and see, what good opportunities it can present to our small caps. Okay, so stay tuned. Follow me on Twitter, Nargis007, and that is with 2 R's, and safe trading.